The world of trusts have changed a lot and will still be changing a lot in the near future. That is both for trustees, for trust service providers, accountants, and trust professionals, and also tax practitioners. All these changes have a direct impact of how we report information to various governmental institutions now, whether it's being under new FATF requirements, new information to be provided to the Master's Office, where SARS would have access to those records over time, whether we are providing information in the form of IT3Ts to SARS on distributions that have been made to beneficiaries during a financial year of a trust, and then obviously the trust tax return at the end of the year. Now, you would have seen over the years strange and interesting questions are asked by SARS for a very specific reason. No longer can these tax returns be completed on a slapdash manner. So it is important to understand why SARS is asking this information, where else SARS may be able to corroborate information, why it's become so important to make sure that wherever we provide information on trust, that information is being provided on a consistent basis. We also go through the actual return for trust to have a look at, with the trust being the taxpayer of last resort, it is important to understand that other parties may pay tax before the trust would be held liable for tax on its income and capital gains generated. So the IT312 would be the last document of the trust that would have to be completed, that will have to balance with the financial records available for that trust. So please join me to have a look at a very practical basis the issues to consider when we're completing the tax return for the trust, as well as what to be mindful of where that information may also be lying, that we need to make sure is done on a consistent basis.